Good evening to all. On behalf of the members in Industry and Business Committee of the Institute of Chartered Accountants of India, I warmly welcome all the dignitaries and participants to this webinar on CFO Global Treasury Management from IFSC Gift City for members in industry and business. We are delighted to have you all with us with this insightful session. I am CA Harsh Goyal, a chartered accountant with expertise in finance, startup advisory, and investor education. I am honored to serve as the moderator for the today's webinar. It is now my privilege to introduce the leadership of the committee. We are honored by the gracious presence of CA Dr. Anuj Goyal Sir, Chairman, Member in Industry and Business Committee. CA Dr. Anuj Goyal Sir is a Central Council member of the Institute of Chartered Accountants of India and has over 30 years of experience with an extraordinary 20 years tenure in the Central Council. He has held several important leadership positions, including chairing regional and central committees, and continues to contribute significantly to the growth of the profession. He is a highly qualified professional with credentials including CA, CS, CMA, LLB, MCOM, PhD, and has contributed extensively to research, publication, and professional development initiative. Over to you, Anuj, sir.
Thank you very much, CA Harsh Goyal ji, our very prominent professional and educator also, and the moderator of today's program. On behalf of the Institute of Chartered Accountants of India and Committee for Members in Industry and Business, I welcome our honorable guest speaker, very prominent resource person, C. Amit Kumar Kedia ji, who is going to deliberate on this very important topic, CFO Global Treasury Management from IFSC Gift City for members in industry and business. We are having the presence of very senior chartered accountant, CA Mahesh Chandraji, who has been on the very senior position in the NTPC, a PSU, a Maharatna. We are having the presence of CA Subham Goyal ji, very prominent practicing chartered accountant. And of course, the pillar of the committee, we are having CA Anita Suneja ji, the secretary of members industry and business committee, and all the respected delegates from each and every part of the country and outside country. A very good evening to all of you. So I'm really very happy that we are continuously having every week this series of webinars. And today we are having this very important topic, CFO Global Treasury Management from IFSC Gift City. And we are having very prominent resource person, C. Amit Kumar Kedia ji, who is having his own GCC Global Capability Center, and he is having his own platform at Gift City also. So I welcome Amit Kumar Kedia ji. And friends, this topic, CFO Global Treasury Management from IFSC Gift City, is very important for the chartered accountants and more particularly the members who are into industry. And friends, you must be very well aware that we have started this industry conversation series, and every week we are having one or more webinars, and I am very happy that members from each and every part of the country, outside country, are joining in very large numbers. Friends, you must be very well aware that as far as this committee is concerned, this committee for members in industry and business, represent more than 60% chartered accountants who are contributing in industry, as well as the chartered accountants who are into entrepreneurship. And in addition to that, you must be very well aware that as of now, at present, more than 80% youngsters are joining industry. So this committee becomes very important. We have taken n number of initiatives to reach out to the members in industry, whether it is CFO forums, executive development programs, industry focused webinars, and global CA industry connect platforms. Committee also promotes thought leadership, professional excellence, and industry engagement while recognizing outstanding achievements through prestigious initiatives like ICI Awards and the 40 Under 40 Awards, in which chartered accountants up to the age of 40 years who are contributing in a great way in industry are identified and are recognized. So we are trying to encourage innovation, leadership, and excellence among chartered accountants and strengthening their role as trusted business advisors and key contributors to the global economic landscape. In today's rapidly evolving global financial landscape, treasury management has become a strategic pillar for every organization. CFOs are no longer confined to traditional finance functions. They are now playing a very, very critical role in managing global liquidity, mitigating financial risks, optimizing capital allocation, and driving sustainable business growth. The emergence of IFSC Gift City as India's international financial hub has opened significant opportunities for corporates, multinational organizations, and finance professionals. It provides a globally competitive ecosystem with advanced financial infrastructure, regulatory flexibility, and international treasury solutions, enabling Indian businesses to efficiently manage cross-border financial operations. Today's webinar has been conceptualized to provide valuable insights into the evolving role of CFOs in global treasury management and to enhance the understanding of members in industry and business regarding the opportunities and strategic advantages offered by Gift City. I would like to sincerely thank our eminent speaker Amit Kedia ji for gracious sparing his valuable time to share his expertise and practical insights on this very, very important subject. I also extend my appreciation to the moderator C. A. Harsh Goel ji for facilitating today's session and to C. Subham Goel ji for delivering the vote of thanks, and of course Mahesh Chandra ji, a very, very prominent chartered accountant. And I'm confident that today's deliberation will provide meaningful learning and practical perspectives to all participants. Wishing everyone a highly informative and engaging session. So once again, I welcome all the delegates from each and every part of the country, outside country, for this very, very important webinar. And I look forward for your very, very active participation. And I will request you to raise your queries, which can be answered by our very, very prominent resource person, CA Amit Kumar Kedia ji. Thank you very much, friends. You're on mute, Harshi.
Thank you. Thank you, Anu sir. We are pleased to welcome FCA Mahesh Chandra ji, who will deliver the opening remarks. FCA Mahesh Chandra ji is the head of finance NTPC Limited and bring with him over 33 years of experience in the power sector. His rich professional journey and leadership in finance makes him ideally placed to set the tone for this important session. Over to you, sir.
Thank you, Ash. Good evening, everyone. On behalf of the member of Industry Business Committee of ICI, I warmly welcome all of you to today's webinar on CFO Global Treasury Management from IFSC Gift City for member in industry and business. In today's global business environment, treasury management has become a strategic function to maintain the liquidity, risk, and cross-border financial operation. IFSC Gift City is emerging as a major international financial hub, creating significant opportunity for the businesses and finance professionals, and in areas such as the global financing, foreign exchange management, and international investment. Today's session has been thoughtfully organized to provide the valuable insight into the evolving treasury ecosystem and opportunity available through IFSC Gift City for member in industry and business. I am confident that today's deliberations and expert insight will be highly beneficial for all the participants. I encourage everyone to actively engage and make most and best use of these learning opportunities. Wishing you all a very insightful and enriching session ahead. Thank you, sir.
Thank you, Mahesh, sir. Now, we are delighted to welcome CA Amit Kumar Kedia, sir, who will be the speaker for the session. CA Amit Kumar Kedia is a chartered accountant with nearly 20 years of experience in finance and cross-border advisory, with a special focus on IFSC, Gift City. His deep domain knowledge and practical experience will greatly enrich today's discussion. I request C. Amit Kumar Kedia sir to please deliberate their session. Thank you.
Uh, Thank you very much, Harsh Goyalji, for your kind introduction. Uh, Thank you, Federal Council member and Chairman of the committee, CA Dr. Anuj Goyalji, for giving me this opportunity to discuss with our members this important aspect, how being a CFO and member in industry, it's a need of the hour and it's having an importance to carry this information and this knowledge with them moving forward in their role as CFO. Thank you, Maheshji, for your kind words and giving an overview and the thought. Maheshji, I would like to take an opportunity to bring to your knowledge that lot many PSUs have now opened their shops at IFSCA, Gift City, and lot many are there yet to open. And it's like the PMO's intervention, where the PMO itself sees that all the importing and exporting PSUs now have their presence at IFSCA. Having that, they are managing their global treasury from across the world or maybe India, but this should be the new jurisdiction where from the PSUs should operate. We could be discussing in our session during the day today about what all PSUs have already been there and what are looking forward for. So, friends, we would be dividing our session into four parts today and would be requesting you that any given point of time you feel like to ask, we would be taking some breaks between those sections, and we would be first answering, clarification would be given towards that aspect, and then only we would be moving forward. So in the next 2 hours, I am assuming that no stone is being left unturned, no question is not being left answered. That would be, I would be trying to ensure. So friends, first and formally, what this treasury is all about, why CFOs today needs to understand this treasury system, this treasury ecosystem which is there at IFSC. That becomes a very important aspect. Friends, when I am there sitting at a responsibility where I need to see the global treasury, I need to do an assessment of the volatility which do exist across the world in these difficult times where continents are now under war. It becomes very important to hedge myself. I don't have time where I would be doing somebody mic is unmuted. If that could be muted, I would it would be helpful for me. Thank you very much. So it becomes very important when overnight I need the information in just into nanoseconds, where if I have not taken a stand on that information on a real time basis, I could fall into big losses. Each and everything of mine as a global CFO should be upon a single screen. Having said that, having understanding about the complexity of the finance which is happening. The information transferability is so quick because of the digitalization that it also gives an help of working, seeing everything on a real time basis with all this ecosystem, with the controls which could be created through digital mode, that becomes more easy to sit on a single place and can control my whole finance of my whole group, which is not in a particular single jurisdiction, but which is spreaded across the world. So, in that situation, it becomes very important. It gives me very efficient manner in which I can plan myself. Along with it, I want a liquidity to be formulated where things are so liquid and presented in such a simple manner that it helps me that if any part of my entity at any given geography is short of fund, or if it is excess of fund, that is being adjusted, that is being managed, that is being used to its most efficient manner. So does reducing my cost, maybe in terms of the banking, where I am doing banking with multiple banks, I am doing forex, I am hedging my forex risk at various different currency, and in totality, it gives me a highly efficient ecosystem for my entity itself, and that too in an automated manner where things are being automated. I need not to put my efforts multiple times for a single effort, for a single work which is required to be done by me. So the efforts put in, the value in terms of human capital put in, the time put in get reduced because it has been shrinked. It has been put to a single jurisdiction where I can see everything. So that was all about and broad understanding why this treasury, putting the treasury into a single basket becomes a more important and an efficient matter. Now, gift city as very well known by each and everyone, but the real term is IFSCA. IFSCA is the regulation which is governed by IFSCA authority, which is having its head office at Gift City. So it looks like to be a synonym that IFSC and Gift City is synonym, but this is the major difference which this jurisdiction and regulation comes with. Now, what this jurisdictions or the regulation is giving, it's a unified regulatory structure which IFSC is bringing. We would be understanding it in our later slides, how it is becoming a unified regulator. It is just recently in February, the tax holiday have been increased to 20 years out of 25 years. So any 20 consecutive years, there would be a tax holiday which could be enjoyed. There are several exemptions which are there in terms of the Companies Act, which is there. So, specifically in the Companies Act, the exemptions have been brought into place so that any entity which have been incorporated at IFSCA, those exemptions are being enjoyed by them. Multiple currencies which a single jurisdiction is having, so a single bank, and can you imagine it have multiple currency accounts which could be opened, multiple currency accounts which could be operative from that single bank, and undoubtedly being a new jurisdiction, the flexibility is very high where you can just understand it's not a mature market, but because of being evolved, there is flexibility in terms of listening by the authority. Authority listens, authority gives its suggestions, authority takes its suggestion, and which helps in development, in helping the entity which is looking forward for a jurisdiction which is flexible in terms of. And undoubtedly, it's a very liberalized regulatory environment. Again, FEMA is not applicable over here. To some extent, the FEMA, which is applicable, that is applicable to only to the extent of some reporting. So, an area which is inside India, but then also which is outside India, is the salient feature of an IFSCA gift city. So, friends, this is what is the gift city, the IFSCA. It is between Gandhinagar and Ahmedabad, which is there in Gujarat. Again, the gift city is being developed and by being run by the Gujarat Urban Development Company Limited. It's in special economic zone. So, what gift city is divided into two parts. One is the domestic tariff area, and one is the special economic zone. So the domestic total area is around 900 acres, and the domestic area is around 600 acres, and the special economic zone is around 250 acres. So what we are discussing and where our interest lies is this 261 acres, which is an special economic zone. Now, understanding about this special economic zone, we need to understand that this special economic zone is not for products, it's not for manufacturing units. This special economic zone is very specifically for financial products and for financial services. Friends, this we have to remember and this we need to know that the financial services and the financial product is the key catch which is there at IFSCA Gift City. So tomorrow I say like it's a special economic zone, but I want to create a manufacturing unit or need to do a trading in terms of a product, it would be big no. But if it is a financial product or a financial service, it would be a big yes. And as I was telling to you, it is a international financial service center which is having a unified regulator. So how the birth of this regulator came in place was way back in 2019 when the act from the parliament got passed. With the act passed by the parliament, the authority got set up in April 2020, and post the authority being set up, they had made their head office at Gift IFSCA Gift City. So, as we know, the regulator SEBI is having its head office at Mumbai. You can just take the similar example. IFSC as an authority is having its head office at Gift City, Gujarat. So, why I am saying the unified regulator? Pension Fund Regulator and Development Authority, the PFRDA, Insurance Regulatory and Development Authority, that is IRDA, the Reserve Bank of India, RBI, and Security Exchange Board of India, SEBI. All these four regulators before 2019 were coming with their regulation. Having said that, they would be a driving force at the IFSC, the gift city, before 2019. But now, post 2019, all these four regulators' powers have been taken for the special economic zone. for the IFSC Special Economic Zone, that 261 acre we have seen. In that area, now IFSC would be the regulator and the authority would be IFSC. So by this, hopefully you might have understood the structure in terms of geography. You might have understood the structure in terms of the regulatory framework which IFSCA is having. And what is the difference between Gift City, IFSCA, which part of the country is this special economic zone is about? Now, friends, the most important thing, as we are the chartered accountants, we first and formally understand what is the cost effectiveness. What would be the benefit if some of us be there? What would be the benefit the entity would be getting? What would be the tax planning which could be created by any entity? So this is what is being offered and be given by IFS. Zero taxes for consecutive 20 years out of 25 years, and 15 years corporate tax holiday post this 20 years is being completed. So it would be only 15%. So what is being seen by the government of India in the budget 2026 was the foreseeability, the future thoughtfulness that all the taxes which would be charged would be at the international standard post this tax holiday period is over. So the dust which was there, the dilemma which was there, all went off with having said that bringing 15 years, uh, 15% as the tax holiday post 20 years of the zero tax which would be there. There is no GST, so GST is exempt. The MAT or AMT is as low as 9%, 0% capital gain, as the place, the gift IFSC Special Economic Zone is not being considered in India. All the transfers which are being made there would be considered as they are not being transferred. And as we all know, if something is not transferred, then it would not be captured under the capital gain. So there would be zero capital gain tax which would be there. No withholding taxes on the interest income, tax-free fund reallocation. So any fund across the world, if coming and getting reallocated, there would be no taxes on it. You would be knowing, you would be understanding the importance when we would be deep driving in the treasury, that when the fund managers would be bringing their funds from across the world, or they would be managing their treasury from IFSCA, they would not be worried in terms of taxations which would be levied on them. Over and above, no security transaction taxes, no commodity transaction taxes. So these are the tax incentives which has been offered by IFSC. Again, this tax incentive will help in understanding me future in future why my bringing my treasury, my global treasury at IFSCA makes sense. I was talking to you in regards of the multi-currency operations which are there. So these multi-currency operations, you can see these are the 15 currencies which are there, and anyone across the world can work in these currencies there at IFSC. Friends, one thing you can question me, and that question would going to come, I cannot see INR over here. And you would be absolutely correct in asking that question, that why being in India, why INR is not there. So just for a sake of repetition, I again repeat, friends, IFSC is in terms of land in India, but it is outside India. So income tax would be applicable, but with the exemptions which we have seen, and with the Income Tax Act 2025, there is a Schedule 6 where all the exemptions have been given. Companies Act would be applicable for an entity set up at IFSCA, but there are exemptions for the IFSCA company. FEMA would not be applicable, but there would be some reportings which would be required. So, might be with this, the overall viewpoint of IFSCA would have been cleared. So, if we take an example, an entity which is operating in 10 different currencies across the world, this 10 different currencies can be brought in to a single bank account at IFSC, because these 15 currencies are what is being notified there. So, going to our last slide in terms of understanding the overall structure about what is as of now, as on date there at IFSC, what jurisdiction is bringing, then we can see that there are around 43 banking services. This includes banks, around 37 odd banks. These banks are not all Indian banks or nationalized bank. This is mixed of Indian banks, mixed of foreign banks, and Indian banks, nationalized banks, and private banks. There are global regional corporate treasury centers, which is I was talking. There are around 10 of them which have opened. There is global in-house centers. Capital market intermediaries are there. In terms of fund management, there are around 600 odd units. Fintech ancillary services provider, bookkeeping, accounting, taxation, financial crime compliances service. There are entities which have been set up. Insurance, reinsurance, and asset leasing, shipping leasing, oil field equipment leasing, aircraft leasing. So these are the financial services, financial products which are available there at IFSC. So, friends, these are the entities which have already started their corporate treasury centers. Can I please request to mute, please, Mahesh ji, uh, Harsh ji, like, can we mute? So these are the corporate treasury which are there as on date. So you can see the industries, textile industries, there is iron steel manufacturing, they have set up their treasury center, energy, information technology, public sector undertakings like GAIL, ONGC, Indian Oil, international entities like ArcelorMittal, they all are now looking forward to open their corporate treasury as their corporate treasury head office at IFSC. And you can see the mix. The mix is the listed and the unlisted entities. So it is not that only unlisted are coming or listed are coming. It's a mix of all of them. Harji, if there are any questions, would be happy to answer them. Before, like now, we would be moving to very specifically towards the finance company regulation.
Yeah, sure, sir. There are a few questions from the participants.
Yeah, please.
First thing is, what innovative liquidity management tools are available to CFOs operating from Gift City, especially for managing currency risk in a volatile global environment?
So we would be capturing it at our slide also, but just to give an overview, the ecosystem at IFSC is in totality available there. As told previously, there are banking, there are around 37 banks, and out of these 37 banks, 11 of them are international banks. So what hedging is required to be done could be just done at sitting at that IFSC jurisdiction. There are exchanges which are available there at IFSCA. So you need not to like hedge yourself in US or at UK. There are exchanges which are there where available at IFSCA only. There are security measures. There are softwares which are the software providers, the service providers, which are very well there at IFSC itself. So that could be the ecosystem there in itself, which could be used.
Thank you, sir. Sir, another question is, what is the outlook of the cost of funds for financial year 27 from a lending institution perspective? Do we expect the repo rate to increase in FY 27?
So it's a very futuristic question, I think so, which is I think so not directly related to the subject as of now, because rather I won't be able to predict it also. So I would avoid this question.
Okay, sure, sir. Sir, next question is, what are the risks, financial and regulatory, of opening an account in a bank in Gift City?
So I would going to say it is not like a risk, financial risk of opening a bank account at IFSC, but like you are hedging yourself. So I just go off the topic and just take an example of an NRI, where if one of the NRI is coming and opening its bank account at IFSCA, he can open those accounts in those any of those 15 currencies which are available at IFSCA first. In any part of the world, the nomination is an concern. So he would be getting that nomination facility at IFSCA. Third, the money is in India. Physically, if we talk, you are in India. So the money is technically in and physically in India. So say at any given point of time, India and any part of the world or any cross countries just gets the relationship gets bitter. Their accounts get freezed. The example which we have seen in Russia, what happened in 2022. If something does happens, the accounts does not get freezed and your money is there in your home currency. So these are like some of the few examples which I can take. In addition, in terms of the interest rates which somebody would going to get, because the interest rate would be driven by the real-time structuring. So it is always a possibility that you get 25 or 50 basis points higher than what interest rate is available across the world. To some extent the interest rate you will not going to get in the mature markets also. So it is not risk but an advantage of having a bank account at IFSC.
Sir, there is one question on audit context. Can single audit report be issued on Gift City financial statement prepared in both USD and INR? Should opinion address USD financial statement with INR translations or vice versa?
So we would be capturing it in a later slide. The 15 currencies are there. So in that 15 currency, one thing is there that INR is not there. So certainly any entity which is there at the IFSC reporting in INR would not going to happen. That is for sure, right? Now we are left with 15 currency. Out of these 15 currency, in the regulation, they have made a standard that the reporting is required to be done in US dollars. So whatever reportings are to be done at by an entity which exists, which is having their presence at IFSC, that would be done in dollars, US dollars.
Okay, thank you, sir. The sir, should I next question?
Yeah, we can just, because I have told no answer, no question would be unanswered. So we can just take a question
Okay,
and
sure.
no worries. Then
Sure.
we can proceed with the.
My question is, what is the difference, advantages, disadvantages of opening financial accounts in a bank in Gift City as opposed to
Can
anywhere
you
in
please repeat your question?
what is the difference of opening financial account in a bank, basically account in a bank in Gift as opposed to anywhere in India by an NRI?
Can you? Yeah, there was some voice disturbance. Like, yeah, sorry.
So it's basically they are asking about the difference if someone, if NRI is opening an account in bank and anyone else in India is opening an account in bank in Gift City. Is there a difference in both?
So there would not be difference to the extent I have understood. If a resident is opening an account in IFSC, it would be a foreign account.
Yeah.
If for the resident,
Hmm.
right? For a non-resident who is opening a bank account in IFSCA, it would be a normal extended bank account, which is he is opening in some another foreign jurisdiction. So that would, I think so, would be a difference. More, I need to understand the question for a better clarity to get.
Okay. Thank you, sir.
Yeah.
The next question is, what are the benefits to open operations at gifts and other industry companies can open units at their.
So we have like clarified this previously, where like it needs to be a financial product and a financial services first and formally. If they want to open a treasury, definitely they can open a treasury with any of the products, with any of manufacturing, anything, because treasury is financial services, financial product. So they want to like say do manufacturing? No, that would not be. But any entity across the world, maybe a company having a head office at Netherlands and is operational across the world along with India, or even not having an operation at India, wants to open their treasury center in Gift IFSC. Yes, they can. But you say that that Netherlands company wants to start a manufacturing at IFSC, that would be a big no.
Thank you, sir. So next question is interest in FCY current account.
So I think let's move, because what we have covered till now, the questions are not in regards of that, I think. So
Yeah, I
I,
guess from the topic, the questions are like the topic that you have covered, the questions already covered.
yeah,
So
so
I think,
let's I think so let's because our presentation would be covering those questions.
yeah,
So
sure,
maybe these questions could be taken at the end, or maybe the second section we would be ending post
sure,
that.
sir.
Yeah.
Sure.
So friends, now what we have understood, what is the gift, we have understood what is IFSCA, we have understood what are the features which this is, all this jurisdiction is bringing. One important aspect which I want to tell now, why this IFSCA actually came in picture is in terms of bringing all the offshore entities which were there in India, which have gone outside, to bring back to India. So, what was happening? Entities who had created their offices in India, which got incorporated in India, thought that now it's a time we have grown up, We want to do a tax planning. We want a efficient financial systems for ourselves. Then those startups moved to Singapore, Dubai, UK, US. So the first and the prima facie thought was to bring them back, give them a jurisdiction which is similar, which is equivalent to those international financial centers which they are getting outside the country. That was the prima facie thought of bringing this IFSC gift as a concept by then Chief Minister Shri Narendra Modi and current Prime Minister ours. Then, when the things matured, it was a thought which was brought in place that whatever financial transactions are having across the world, GIFT IFSCA can become a headquarter in time to come for all those financial transactions which are happening. So you can say, see, entities like ArcelorMittal, which are based in UK, which is based in EU, the Europe, Luxembourg, they have now came and started their operations, their treasury operation at IFSC. So that was the background why the gift was incorporated. And the products are so much financial products are that in a single country whatever financial products you can get that are now available at this jurisdiction of IFSC. So friends, now coming to the specific area setting up of the finance company, a finance unit at IFSC, an entity which is run under the framework of finance company and finance unit regulation in itself, it is having a separate regulation, and we would be understanding what is all in this regulation. A broad outlook we would be taking in terms of what is there in this regulation. So there could be two methods, there could be two ways in this finance companies or the finance unit at IFSCA could be set up. Maybe it may be set up in a separated company, a entity which is separately incorporated. So a standalone company, you can say, a finance company, or it could be set up in a form of finance unit. That is a branch of the parent entity. So these are the two ways in which any of this treasury in terms of finance company or finance unit could be set up in IFSC. Now, there are two separate activities which have been put in place in terms of operations by these finance companies or financial units. What opportunity is being brought into these frameworks are being divided into two parts. One is the permitted core activity, the activity which is permitted, which is the core activity of this entity. That may include the receivable management, investment operations, derivative trading, treasury management is just a part of this core activity, and lending and finance. So one of our participants asked a question, what are the advantages which has been brought into? So this is what is the advantage. Whole of the ecosystem. If I want to go take a lending, give a borrowing, if I want to raise funds, if I need to do factoring, all these infrastructure, all these ecosystem partners are available there. I need not to run through and forth to any X country or to Y country. Each and everything would be available and would be given to me at this particular jurisdiction only. So these are the primarily core activity which can be opened. The non-core activity, there would be some of the non-core activity is being governed by their specific regulation. So if that is being captured in that specific regulation, then either they can incorporate over here or they need to go to their specific regulation. If they are not going to the specific regulation, then they need to maintain whatever have been given in that separate regulation, specific regulation over here. So advisory like the capital market advisory, agency and administrative uh, uh, activities, maybe in terms of giving the trusteeship services or the transfer agent services, any of the distribution platforms, maybe in terms of the mutual funds, insurance, or any trade finance platforms, market operations like the trading clearing member, professional clearing member, leasing and asset support, and any intermediary role which is required to be done by the authorized person, they all would be captured under the permitted non-core activity. Some specific points which we need to very well clearly understand when we are talking about a treasury center, a company which could be incorporated, which can do activities in terms of treasury, we need not to take it and we need not to understand that a full-fledged banking system is being created. Friends, this is not a banking company. It is just an extended arm of the global operations which I am having. So I cannot take public deposits from people at large. I can just take in deposits from my in company, from my enterprise, which is inside. I cannot go to public and seek deposit from that. I cannot register myself as a banking unit. If I need to do it, I have to do at a separate as a separate entity, as a banking unit, which I am required to do. So this is a difference, a very important difference, which we need to be clear, which we need to understand. It is not that opening a treasury company, I can start lending, borrowing, it would not be allowed. It is just a in-house group company which is managing the whole treasury. In-house treasury, it is what we are talking about. Finance company, we should not at all mean that it's a lending borrowing company. If that is the business, we need to go and get ourselves registered separately as a banking unit. There needs to be a minimum fund which is required to be held by these finance companies and the finance units. We have seen the distinguishing between the permitted core activity and the non-core activity. So in the permitted core activity, own fund of $3 million is what is required to be maintained. Apart from it, if the entity is running through a non-core activity, it just need to maintain $0.2 million as its own fund. The treasury operations, which we are talking about is a non-core activity. So if a finance company or a finance unit is purely operating for its group entity operating as a treasury center, then it just needs to maintain $0.2 billion as its own fund. If there are some other activities which falls into non-core activity, then that would be the limit they need to see. If they are following some of the permitted core activity, then they need to increase the value to an extent of $3 million. This is what is, like, you can say, the liquidity that they are required to maintain to keep. As the question was asked by one of our member, the balance sheet which is required to be maintained would be in terms of US dollars. So it would be no other currency in which the reporting of this balance sheet would be done. So if we understand by an example, there are five countries in which I, as an entity, is having my operations, having my treasury at GIFT IFS: Australia, Singapore, US, UK, and India. Now, taking these five currency into place, my treasury would be maintained in that currency which is permitted there. But when I would be creating the balance sheet, maybe my money is being kept at IFSC in Australian dollars or Sing dollars or euro or pounds. But when I would be presenting that all currency would be required to be converted into US dollars, and then it would be presented. So this was all about the gift IFSC, the geography, the regulator, the finance company units, how what is permitted, what is not permitted, what these finance company needs to maintain. Now we would be understanding in terms of specifically one of the part of this finance company, that is the global treasury in IFSC. Before that, I will request if there are any questions we can take, but please see that the questions are in regards of what we have already covered. Rest we would going to take those questions in it.
So the first question is regarding the non-investment company, that is being leasing company.
Okay.
Yeah, so the member is asking that what options are available for investment of surplus funds apart from bank for such companies in IFSCA.
So, friends, it is like the world is open. Uh, First and formally, I have a internal ecosystem. So if I can see my internal ecosystem, I have the FMEs, that is the fund management entities there, which may be the AIFs, which may be the ETFs. Uh, there is a separate capital market which do exist. There are two exchanges which do exist there at IFSCA. That could be a gateway for investments across the world. There are mutual funds which are there. So, to an extent, there are mutual funds which are very specific to specific countries. Mutual funds which just invest in China. Mutual fund which is just investing in US. So there are lot many options. I would going to say within my own jurisdiction, IFSC. But if I see my horizon, I can do my investment across the world. It is not I needed to restrict myself to IFSC. It is only that all my global funds is being seen on a single screen in front of me. All funds are being managed from there. If any loan book is to be raised, is being done from here. If any investment across the world is to be done, it is done from that single screen. There is no restriction that if I'm at IFSC, I need to find out a solution to invest for investments at IFSC only. The whole world is open to. Next question, if any.
Yeah, the next question is about the global treasury only. So I guess this should be taken after this part.
No worries.
Yeah. And last question I have asked, interest in FCY current account.
So it is absolutely very variable. It is around 3.7 to an extent of, to the best of my knowledge, around 4.25 to 4.5 also in some cases. So it is very variable. You need to check with the concerned banks because, as I told, it is very dynamic. Because what is in front, if the banks are having a good lender in front of them, they can offer you better rate. If the market are soft, then might be you don't get a rate. So point 25, point 5 basis points are always variable, and it's like there is a flexibility of that. But definitely, yes, the rate of interest which is available in India, that is far more higher than with the rates which are available at IFSC because of the cost which is being there. There is a cost saving which is being put in there. There is a tax incentive. There is like the convertibility. The exchange rate is far more higher because there is no conversion of the currency which would be required. So taking all these aspects, 0.25, 0.5 basis points will always be higher than that. So yes, any further questions, please?
No,
Should we
thank you, sir.
move? Yeah. So yes. So coming to our important session, for which we have assembled today, we have came for this session. That is the global treasury at IFSC. So if I just think, okay, my business is going good, why I should go and see a jurisdiction like IFSCA for a global treasury? I am very well placed at Singapore, or I am very well placed at Netherlands, or I am very well placed in India. Then why I should go and see this jurisdiction? So we just divide this question into two parts. One part would be for the Indian corporates. The Indian corporates which are operating across the world. Yesterday, if I needed to borrow any foreign capital, I needed to run to Singapore, London, or Mauritius to an extent of I just wanted to have just 50 million. I needed to run there and needed to raise my fund from there. But now I can just go to IFSC jurisdiction, start my discussions, and can raise capital from there. Maybe a flight from the middle of the India, that is from Delhi to Singapore, might take 5.5 hours for you, but a flight from Delhi to IFSCA, that is Gift City, Ahmedabad, would going to take 2 hours to you at a max. So see, saving your time in the similar manner, saving your efforts. You can do a better coordination. You can do a better communication because who is there? in the IFSC would be someone who is Indian. And to an extent, 75% of the banks which are there at, or to an extent, foreign banks also, the employees there are Indian, they can understand your language. If I am a global entity having my operation across the world, but I'm not having my operations in India, then why it makes a sense for me to come to India, to come to IFSCA and open my treasury center? That is the GCCs you might have heard. A small example of a GCC in terms of treasury, where my all the treasury operation in form of a GCC or all my head office, which is taken care in terms of my treasury, is shifted to IFSC. What benefit I would going to get? Cost effective employee. A person would going to see that I would going to get the best talent in world within cost effective human resource which is there available there at India. In addition, what he would going to get, the cost of operations in terms of real estate. If I take an a real estate in US for my office, paying a rent in US and paying the same area premises in India could be one tenth. So I'm saving a huge cost on my human capital and at the operational cost which is having. In addition, all the products I can find in the same jurisdiction where I am being available with 15 different currencies. So yes, this is the reason why someone, a CFO, needs to think about the treasury center at IFS. This was the human capital. That was the operational cost. But over and all, the cost of taxes, there would be none of them because it's a zero tax free zone. So these what is creating an advantage for me bringing the treasury center in-house bank, you can understand. So think of that I have 10 offices. In those 10 offices, 10 finance team are sitting, 10 different time zones, and the management is high and cry. But if I'm bringing all of these treasury under a single time zone, might be I am coordinating with other time zones also, but then also it gives me an easiness to at least manage at the odd times because I at IFSCA is almost in the centralized time zone of the world. That gives me more added advantages. Managing all my liquidity centralized, managing all my risk there at from a central place, and over and above, all the financial operations are being seen by the multiple corporates which are spreaded at a single point. All the currencies hedging which is required to be done can be converted into a single currency or can be taken from a single area, single place only where my currency hedging would going to become far more cost effective. So, which going to help me in reducing my operational cost and the support would be far more larger at a single point of time. So, who could be the service recipient in this situation? any of the entity which is a unit of that group entity. So the transactions could be done through those entities, between those entities, keeping IFSCA, the Treasury Center, as a base. Any of these group entities partners can be taken and can be seen in terms of the group entities for which the services can be given, can be provided. Maybe any of the parent entity or any of the group entity, any of these branches of the parent can be the beneficiary. One thing which we need to understand over here, that this is considered as person resident in India, but it is subject to the FEMA compliance, which is to be seen. So all the entities, they would not be required to do the FEMA compliances. Only to an extent of the reporting is what is required to be done by these entities. And the persons who are outside uh, the country would be person who would be resident outside the country. Then in those cases they need to see that FATF compliances of that particular jurisdiction have been taken care. So over and above, it is available, the jurisdiction is available for an Indian entity which are doing their global treasury operation, maybe from India or from any other part of the world. They can see this jurisdiction as an opportunity. An entity which is outside India, which is not having an operation in India, to that extent also, these entities can see GIFT IFSC as their jurisdiction. So there is a definition which is given in the regulation itself, which showcase in terms of any of the subsidiaries, any of the parent entity, in terms of the related party, or in terms of the investments, if more than 20% of the investments in terms of equity is being done, or any type of joint venture or association, they all would be captured and understood to be a group entity. So, why this extensive understanding of group entity is required to be understood? That is because previously we have seen and understood that no one can open a bank account, or nobody can lend or borrow. But if it is done within the group entities, then in that case, it would be available and there would be no violation. So, because of that, understanding of the group entity definition becomes important. As now, moving forward, if someone likes to look forward for setting up a treasury at IFSC, then quickly we can understand in these 5 stages where an entity is required to be formulated. That entity is required to identify office space where it is coming in form of a company or a branch that we have understood previously. They need to put their application through the IFSCA and the SEZ. Again, it's a single window Swift portal with a fees of 5,000 rupees. They can do a put an application with an authority. They would be getting a LOA, provisional registration, you can say, and post getting this provisional registration, they can infuse their capital. So capital could be infused post that. Then they would be post like infusion of the capital, there would be clarity that now all the formalities, the formation of the entity is being completed. Post that, the certificate of registration would be issued to them, and any of the entity needs to see that they have a person which is a compliance officer who is a key managerial person with a minimum qualification, which is five people who should be the qualified people who needs to be there in the entity. So that particular small staff requirement which is there, including the compliance officer and the key managerial person is there, which is to be maintained and to be taken care. So this is what is the simple process where everything is being done in online, no physical movement of documentation and things in terms of submissions have been and the incorporations have been done. So application fee of 1,000 rupees is there on the application which is being put. There is a registration fees which is there, that is a one-time payment of 12,500, and there is a recurring fee which is to 25,000 US dollars, which is there in terms of the registration process. So this is what is the regulatory or the statutory fees which is there. So if we see and understand with the bank account operation, the bank account could be operated in any of these 15 currencies which we have seen previously. Now, with these operations of these 15 currencies, as the employees are there in India, as the salaries are required to be paid, it would not going to happen that if the entity is global or somebody is having work in a global treasury entity, then they would be paid in those global currencies only. So for that, there is a rule which is there in the regulation, which is termed in as special non-resident rupee account, that is SNRR. So you can see, you can understand that this is a separate account which has been kept for the operational reasons. So tomorrow there is a 1 crore salary or 1 crore operational expenditure which is required to be done, then the treasury's entity, the treasury company can transfer $1 lakh to this account. This $1 lakh would be converted into INR, and the distribution of the operational cost, maybe in terms of the local expenses, maybe in terms of the salaries which are required to be done, that would be taken care, the payments would be done with. So this account, you can say it's an operational account. It is nothing to do with the global treasury. So with this, if you understand that, okay, if the operations are allowed to be done in INR, why not global treasury? No, it would not be allowed to be done. The global treasury operation would only be allowed to be done in form of the 15 currency. But if in case day-to-day operations are to be run, then in that case, that could be done. So friends, this is what, like, I just wanted to give an overview in regards of the global treasury operations which could be put in place at IFSC. Now, we as chartered accountants, we as CFOs of the entity, what all we need to take care of when we are sitting there at IFSCA, maybe in terms of the compliances which are required to be put in place at IFSCA, cross-border structuring which would be required, trade finance which we need to see. Again, the trade finance which is there can be availed at the banks at IFSCA, raising of the foreign borrowings, raising of the external commercial borrowing, reporting of the structure in IFRS, aircraft leasing, shipping leasing, transfer pricing. This is all we need to see and take care apart from the internal operations which we need to see. So with this, I complete my presentation and look forward to answer your questions. Would be happy to answer each and every question which is being posted. So over to you, sir.
Thank you, sir. Sir, another question is whether RBI ODI regulations are applicable on investment made in GTC from Indian entity.
RBI.
RBI ODI regulations.
So as told to you as told previously, consider IFSCA, SEZ jurisdiction, and rest of the India separate. If I am crossing the IFSCA from India to IFSCA, that is a special economic zone. If I am crossing that, I have gone out of India. So if I
Okay.
am going out of India, if I'm sending any money to Singapore, what applicability of FEMA would be applicable to me in the similar manner if I'm doing any investment from India through IFSCA, that would be applicable to me. That reporting is required to be done. This is one aspect. Now, I assume I'm not an Indian company. I'm a company which is outside the world, maybe an entity which is like coming from UK. Now, if I'm doing any activity at IFSCA, there is no reporting which is to be done by me. FEMA would not be applicable to me. But if any of the asset allocations have been put by me, then only I need to do simple reporting. So again, income tax would be applicable on me, but under Schedule 6, it would be exempted. Companies Act would be applicable to me, but again, there are exemptions for that in company.
And sir, if the GTC entity is investing something in a foreign entity, in that case,
GCG,
GTC entity is investing in a foreign entity.
they can invest, they need not to do any reporting. If the money is being raised from India to there, then
Okay.
the reporting is for India. You are
Okay.
not doing any reporting for IFSC. If I am doing, I am bringing my money from Singapore to IFSC and then investing to US, I need not to do any reporting because the money have been kept outside India. Money have came from Singapore, went to IFSC, again outside India, went again to outside India, US for investment.
Okay. Thank you, sir. So another question is it possible to undertake procurement of material or trading activities through a gift entity?
No, again, like financial product and financial services. This
Okay.
is all I can do. If I want to operate,
Hmm.
do an operation in these parameters, I can. So if my product, I want to do my financial planning of that product, financial management, rather, I should correct myself, financial manage of my entity. yes, I can very well do that. In that case, there is no restriction on from the sector from which the entity is coming. To an extent, the if I go and get myself listed at IFSCA, then, for example, a UK company comes tomorrow and get itself listed at IFSCA, it need not to come and get itself registered over here. In that case, he can just, the entity can just come, get themselves listed, raise capital from Indian investor, from world investor, and can take the money outside at UK, Singapore, US, wherever they want. They need not to even come and get themselves registered over here. So this is how the beautifully the flexibility have been created. As told, like it's a new regulation, so there are lots many flexibility which is available in these regulations.
Okay, sir. Sir, another question is regarding the current economy. So the member is asking, how can we hedge the returns as INR is devaluating quite a lot with major currencies such as USD? So how can we hedge it, the returns basically?
So again, like if like the INR is involved, then definitely you need to take care and you need to see the FEMA regulation, and to that extent, like that hedging would be available. Again, this question is not direct to either IFSCA or the Treasury. You need to see the LRS routes where whatever is available, whatever relaxations are available, you need to just take care of them. Yeah.
Sure, sir. So next is, can an NRI set up real estate investment trust by bringing money from abroad?
Yes, definitely. In the FME regulation, the REIT is also one of the product which FME brings. So again, needless, need less, I would going to say, he's an NRI or he's an Indian. Anyone can set up their shop. Again, it would be a mini treasury. You can say anybody can set up their shop in terms of investment vehicle, that is a REIT vehicle. That REIT vehicle could be created there. They can pool the world capital, the world NRI non-resident capital at IFSCA, and can bring that capital to India. If they don't want to bring that capital to India, they want to bring that capital or take away that capital to Australia, they can do that also. Other way around, if any resident in India wants to set up a fund there where they are pooling the world capital there and then pooled capital they want to bring to India, that could be done. So any combination could be created. It's totally depend on how the things are being structured.
Thank you, sir. Sir, is Companies Act applicable to companies incorporated in Gift City?
Yes, Companies Act is very much applicable in the companies which are incorporated at Gift City. First, the basic importance which would be seen would be like we write any private company as a private limited or a public company as a limited company. In the similar manner, the IFSCA entities which are being incorporated are being writing at IFSCA the world. So recently, like the Shipping Corporation of India have incorporated their entity there. So Shipping Corporation IFSCA is being added to it. So this is how like it's been placed. And then there are some exemption in terms of reporting, exemption in terms of the capital that are there. Again, those exemptions could be availed.
So there is one question that, can we use interest earned for doing the payments and expenses of normal nature?
Sorry, you need to please
Can
come again.
we use interest earned for payments and expenses of our business?
So if again you have gone outside the country, if you are earning in IFSCA, you have gone outside the country. If you are managing your expenditure from outside the country, there is no worry. If you are earning also, there is a tax exemption which is available to you.
Okay, sir. So there is a case study based question that member has asked. I will raise funds from Gift City. Is it free to bring to India as loan entity are registered in Gift City? And another part is, and I have entity B in India. I will borrow funds from other country through, and can I lend to B?
So again, it's a matter of structuring, but I think so. We have discussed the REIT example just sometime before. I think so. This question, we if we apply that, the answer would going to come. More or less, it's looks like to be similar thing. So the concept of the REIT which I have told is, I think so, what would be applicable over there in terms of company here, like in terms of REITs, we are creating a company. Again, whatever company we are creating, that needs to be captured under some of the regulation. So the regulation would be the capital market regulation or the fund management regulation or the treasury regulation. That is the finance company regulation. So under which regulation I want to do this work, that prima facie I need to understand accordingly. Like I need to be governed with that. So in a very simple manner, I can tell you, like, please don't get confused in terms of this single regulator. In India, we see like there is a pension regulator, there is an insurance regulator, there is a banking regulator, there is a capital market regulator. So you just think that whatever type of activity you need to do, you need to put that activity in under that particular regulator. This is what we do in India. In the similar manner, the activity remains different, but the regulator is same. So having said that, that the regulator is same, you cannot bring all the work in a single entity. This is how like we can understand this concept.
Okay, thank you, sir. So one more question. How can chartered accountant in industry contribute strategically to treasury transformation and global financial management?
So yes, I think so. From last 1.5 hour, we have discussed this only, that it's a big opportunity for the current CFOs who are there having their global operations. They can understand their strength and weaknesses of their entity, and accordingly they can place their entity at a global jurisdiction, taking IFSC as their base, because it would always be a comfortable zone in terms of time zone and in terms of human capital which they are having. In addition, if a chartered accountant who is a newly qualified chartered accountant or a chartered accountant who looks forward for a global CFO services, then that could be one of the opportunity. He can see advising that entity, bringing himself on board, maybe at any level of finance in that entity, and take care of those operations from IFSC, because the compliance officer and the principal officer would be required, and nobody better than a chartered accountant could do these or take these responsibilities.
Thank you, sir. So when you say only financial product or financial services activity can be done in IFSC city, is there any standard definition for this term, and which check defines this?
So this is all what I am talking is in regards of the IFSCA regulation. So it's an act which is being passed by the Parliament of our country way back in 2019, and this is what is in the preamble of it.
So again, a case study. I have oil refinery in India. I have treasury in Gift City. I will purchase oil from Dubai, and I will do refinery in India and sell refined oil to other countries. And I will raise invoice from Gift City. Is it possible?
No reason.
Yeah.
I am doing treasury management.
Yeah.
I'm not doing my invoicing from there. So again, by invoicing, I am creating a financial transaction where it would be a product which would be involved. I'm not doing something from financial product. I am doing something for my product. And there where the thin line difference would be there and the invoicing would not be, you can say, eligible or would be possible. But these funds which I am maintaining in India or maintaining in other part of the world, those are fund management. If I want to raise loan in foreign currency, yes, my books could be shown at IFSCA and those loans could be risen by those uh, entity at IFSC. That loan which is raised by IFSC can be utilized to do my payments at Dubai for the oil I am purchasing.
Okay, got it. So, what practical considerations should organization evaluate before setting up treasury operations in IFSC Gift City?
So, first and formally, I need to understand my geography.
Okay.
Is my geography is so widened that I need a separate hub and I am having income also from that hub. Am I having some withhold taxes also because I am at some other jurisdiction? So I am being on a loss with all these withhold taxes. These all evaluations are what is required to be done by someone who looks forward to initiate to start their global treasury. Once this assessment is done, so it is all maths. So if I'm doing a business and after doing the business, if I am at a profit, then I should go for that. If I'm not in a profit, I should not. So we just take a very miniature example. So for example, a $50,000 is an expenditure to open a shop at IFSCA, right? Now, I think like opening an IFSCA office or a treasury at IFSCA would create a gain of $2 lakh to me. Yes, definitely I need to do that 50,000 US dollar expenditure. But if I'm getting a gain of just $10,000 and doing a 50,000 odd expenditure, does not make a sense. So this is the miniature example I have taken. Rest like we need to take into place the cost of capital, the cost of operation, the cost of human resource. They all need to be pulled in an Excel. Needed to do a maths. Picking a employee at Singapore can cost me 5,000 Sing dollars, right? But again, in Sing dollars, if I talk to you, that employee can come to me with a 1,500 Sing dollars at Gift IFSC. That is just mere 1 lakh rupees. So this is what like again would going to become a part of my balance sheet that okay, doing employee bringing an employee at Singapore and same cadre of employee with more mathematician mind there in India is saving around 2.5 lakh rupees for me, and such 10 people are there in my team, so it makes a business sense for me.
So that was a great example to make things understand. Thank you. So another question is about the corporate tax holiday. The question is, Gift City offers 100% corporate tax holiday for 10 consecutive years out of 15. Realistically, what are key transfer pricing consideration a mainland corporate parent must navigate when allocating profits to its IFSC treasury arm?
So I just want to correct, like it's now not 10. Post February 26, once our budget was there, it have been changed to 20. So
Okay.
now the tax holiday is of 20 years. And yeah, I missed your whole question because like I was shocked to listen 10. You can
Okay.
please come again with your question.
I repeat. The second part of the question: realistically, what are the key transfer pricing consideration a mainland corporate parent must navigate when allocating profits to its IFSC treasury arm?
So, first and formally, there was a big change which happened in uh, the Finance Act 2026 in the Income Tax Act 2025, where there was a set benchmark of 15.5% which have been created for any of the international units. Again, for IFSC units, the transfer pricing, as there are exemptions in income tax, and as told, like it's outside India, that applicability would not be put in place over and above. If any of the transaction is just being done by any of the entity which is outside the country, then there would be no point of transfer pricing happening. If an transaction is happening from IFSC to India, then there is a cap which have been kept in the Income Tax Act. That is 15.5%.
Okay, sir. Thank you. So next one is, how should a CFO structure intra-group lending from a gift city unit to international subsidiary to maximize the benefit of tax exemptions on interest paid to non-resident?
So for this, you can just assume like somebody is having multiple pockets, and all the pockets are so transparent that you can see in one go all the pockets. So if you find like if in any of the pocket the value is less, you can transfer that value to another pocket. This is the basic fundamental we can say. In the similar manner is going with my branches and with my other associates. The associates we have seen in the definition, so it could be applicable to any of these associates. If I need to transfer my money, if I want to raise capital for any of my associates, I can put raise that capital from there itself at IFSCA only. Post raising of that capital, I can allocate whatever transfers are being done in terms of the lending to my sister concern, to my associate. Again, there is an exemption that it would not be term in form of a dividend. So again, there would be 100% exemptions for whatever transfers are being made. So with these small initiatives or these small effects, it becomes a very cost efficient manner to manage the inter branch or inter group companies transfers.
Okay, thank you, sir. Uh, Next is, what are the compliance and governance challenges while operating global treasury functions from IFSC Gift City? Like in a
So,
summarized manner, compliance and governance challenges.
very, very, very easy. Again, there is a single regulator, so it is very easy. In addition, as I have told, like it's a upcoming, or you can say it's a very young jurisdiction. So the jurisdiction itself is learning. The jurisdiction itself is open to listen, to take amendments into consideration, and is so flexible that he understands what is the real uh, need of the hour, and accordingly they react, they create, they give solutions. If we take some of the mature jurisdictions like Netherlands, Luxembourg, Mauritius, might be they won't be listening you. They have a set part of rules and regulation, and you need to follow them. But here the flexibility is high. So that gives a comfort. Whenever an entity is there at IFSCA, they talk to regulators like friends. There is a no differentiation between of a regulator and an entity which is registered there. They give solutions like friends to these entities. So this is how it's operating and working.
Okay. Sir, max 2 to 3 questions last
No
that
worries.
are
We can
as
we would going to answer each and every. No answer, no
yeah,
question would be unanswered. Yes.
sure, sir. Uh, so the question is, how do Indian companies optimize cross-border cash flow and working capital management through IFSC structures?
So I think we have answered this. It's like more or less repetitive question. We can skip it.
Okay, sir. Uh, Next one is, yeah, are there specific nuances regarding minimum alternate tax or withholding tax on dividends that financial leaders should explicitly map out before finalizing their gift city business plan?
We have answered it.
So in your session, yeah.
Yeah, the withhold tax and the dividend I have told, like it would be freely. Uh, if, yeah.
Okay, sir. So last one is, what is the future outlook of IFSC Gift City in positioning India as an international financial and treasury management center?
So I can just tell you in brief, like first and formally, the international sustainability finance is now being looked from IFSCA. So all the sustainability, it's a vision of our Prime Minister that all the sustainable finance which has been risen across the world, Gift City could be the jurisdiction. So there would be a big financial hub for the sustainable finance, which is like the need of the hour. In addition to it, there have been many financial services center like the UK, US, Hong Kong, Singapore. They have reached to their, mm, uh, you can say, maturity, or they have grown so much in terms of cost, in terms of their capital, that they have now become ineffective for many of the entities. Many of the livelihoods are like facing issues there. So you can say like we are present at the right time, at the right stage, where the world is looking forward for a change. So many of the entities across the world with these flexible regulation would be looking forward for themselves to be and take this opportunity as an entity at IFSC. Over and all, the government of India, when it's looking forward that 2047 we would be a Viksit Bharat, just imagine whatever funds have been went out, whichever is lying. So just take an example of say Tatas. If there are 40 offices of Tatas across the world and some lakh or some $1 million have been kept across the world in those offices, if that whole money comes and is being parked at IFSCA, at the end of the day, the capital account of the country would going to become strong. In the similar manner, if an entity which is having no Indian operation on the hand side, just having global operation, and if those global operation treasury moves to India, then you can just believe and imagine how big the capital inflow would be happening. So whatever like the hard times our country is going, or like last 25 days, what we have seen how our honorable Prime Minister is guiding whole of the nation. Might be the IFSC would have been 10, 15, 20 years before this situation might have not been risen in the manner like whatever happened in 1991 we all got a very big strength towards it. So moving forward might be because of IFSCA. If some situation like this happened 10 years or 10, 15 years post where we are standing, we would not going to feel the heat of that, because by that time this jurisdiction would be a developed jurisdiction. So that was all, like I can see the future of IFSC, and it's an opportunity for not the Indian industry, but it's an opportunity for all the global industry which are working globally, and with the industry which are working, which are having their presence global and looking forward to come to India. So it's a three-way opportunity for each and every entity which is present across the.
Sir, members are learning a lot from this session, and they have just asked one more question. So, if is it if
Anytime.
it's
No, no, I would going to answer everyone.
yeah,
Then only we would, our time can be extended. I think we should answer every question, please.
sure, sir. So, question is from a fundraising perspective, how can CFOs leverage a gift city GTC to mobilize low cost foreign currency credit lines, buyer's credit, or issue offshore bonds compared to traditional external commercial borrowings ECBs?
Okay.
Should I repeat?
No, 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 no. So I just raise capital in India, foreign capital in India.
Hmm.
I need to put a withhold tax. So I'm an Indian entity. I want to raise capital in India. I need to put a withhold tax of 20%. Similarly, if I go and raise capital from IFSC exchange, which is like, there are two exchanges, NSE and BSC subsidiaries, which is NSE subsidiary and BSC subsidiary. If I go and raise capital from there, again my debt, there would be only withhold tax of 9%. So straight away, if a US investor is investing $100 million to say Adani in India, he would be having a withhold tax of 20%. But if he is going to Gift City and doing his investments, it would be just 9%. Similarly, as I told previously also, if I go or raise capital any from across the world, I need to fly down, I need to do their local laws uh, compliances. I need to see that I am adhere with those local laws. But it is not such in IFSC. As an entity there at IFSCA, I can raise capital from IFSCA and can deploy maybe in India in from an external commercial borrowing, or maybe raising a capital from India and deploying it to other part of the world. So, for example, I am an entity which is there at US. I have two options. I can raise capital from US banks and utilize that money in US. Or I have another option where I can raise capital from IFSCA and deploy that capital at US. Again, as told, there are 38 banks which are there. 11 of them are international banks. Having said that, raising capital from US, from say Bank of America, and raising capital at Bank of America Gift City branch would going to give me a cost effectiveness in terms of the interest rates, in terms of the cost which is involved, the processing cost, because that would be somewhat seen in INR. In US, the bank might be paying taxes, so my cost of lending there is far more higher. But here, they are sitting in a tax-free zone. Here, the cost of capital, the human resource which is involved in deploying this capital in Bank of America branch at IFSC is far more lesser, because they are sitting, they are working on a low cost real estate. They are working from the human capital which is available from there. So just imagine how cost efficient the whole structure becomes with all these small efficiencies which has been created, and things remain same.
Sir, are there any plans to open IFSC in other parts of India as well? Any news, any plans that you?
So the newses are too much in the media, but I think let the first baby grow bigger, then India would going to think of second baby.
Okay. Thank you, sir. Thank you so much.
Pleasure mine.
Now, I would like to invite C.S. Shubham Goyalji, who will be delivering the vote of thanks at the conclusion of the program. C.S. Shubham Goyalji is a chartered accountant with over 12 years of experience in accounting, audit, capital markets, and financial advisory. And we look forward to his gracious closing remarks. Over to you, Shubhamji.
Thank you, Harshji. Good evening, everyone. It is my pleasure to deliver the vote of thanks for this insightful webinar. First of all, I would like to express my sincere gratitude to our respected speaker, CA Amit Kumar Kedia ji, for sharing his valuable knowledge, practical experience, and deep insight on such important topics. Sir, the way you explained the opportunities and benefit of IFSC and Gift City in global treasury management, it was very clear and informative. I'm sure all the participants found this session extremely useful and gained valuable learning from your presentation. It was very amazing, sir. I was there for all the webinar. I would also like to thank our moderator, CA Harsh Goyalji, for conducting the session so smoothly and making it interactive. Your coordination and discussion added great value to the webinar. A special thanks to CA Mahesh Chandraji for his opening remarks and for setting the right tone for the today's session. I would also like to appreciate the effort of committee chairman Dr. CA Anuj Goyalji and others member and the entire organizing team for planning and arranging this wonderful seminar. Behind every successful program, there is always a dedicated team working with the commitment and coordination, and you and your team has done it well. I would also like to thank all the participants who joined us today from different places and location of India and took out the time from their schedule to attend the session. Your active participation and interest made this webinar more meaningful and successful. Nowadays, topic like we selected for the today's seminar are becoming very important for the professional who is working in the industry or business. Session like this help all of us stay updated with practical knowledge and emerging opportunity. Once again, I thank our speaker, moderator, and dignitaries and organizing committee for and all the participants for making this webinar successful. Thank you, everyone.
Thank you, everyone.
Thank you so much, Shubhamji,
Thank
for
you, Chairman, sir.
thanks. Thank you, Amit sir, for such a wonderful session, such a knowledgeable session. I guess all the participating members have learned a lot from your session.
Thank you, Maheshi.
Thank you, Maheshji. Thank you, Anita ma'am, secretary for the committee. Thank you, CA Anuj Goyal sir, Central Council member and committee chairman. Thank you, Maheshji. Thank you so much. And thanks to all the participants who have joined this session and be there for the whole session and have asked the questions time to time and have learned. Thank you so much.